let's get started. So today we're going to be talking about M&A from China, or related to China, investment and M&A. So we have a very experienced and knowledgeable panel, so it's going to be really interesting. I guarantee that, money back guarantee. So just quickly for myself, I'm a consultant and I work on many different areas in the industry and doing more work around Asia in terms of Western companies, strategy partnerships, as well as some investment and M&A, since there is a lot of interest around Chinese market. So I think if we can start with Amy and do some quick introductions for everyone, kind of your name, company, and also how that relates to this topic.
Hi.
There you go.
Hi, my name is Amy. Does this work? From NetEase Capital. NetEase is it working?
Go ahead.
It works?
It's working now.
Okay. Hello? All right. Yay. Okay. I'm Amy Huang from NetEase Capital. NetEase is one of the largest publisher game developers out of China. I've been running investments for the Global Games Fund for NetEase for the past 4 years. So look at some very early stage game content developers, East, West, around the world. We have a lot of portfolios globally. So that's why I'm here.
Hi, Jim Ying. I'm with CV Capital. So CV Capital is a Shanghai-based investment bank that primarily brokers investment and M&A deals between China and outside China. I help focus on the game space and areas related to games, so ad tech, general mobile tech. The company in the last couple of months have done 2 deals between China and out. So there's the Spigot deal for $252 million to Genimus, and then there was the Smato deal, which was just announced around 3 or 4 weeks ago for $148 million to Spearhead.
I'm Brian Chadwich. I'm a lawyer, but I've been an M&A and investment lawyer for about 20 years, but 7 of those years I was general counsel of a British-Swiss company called Miniclip, and I sold Miniclip last year to Tencent. And from that, then have parlayed on to starting up a new practice with Cooley. And Cooley's a global law firm that's a tech law firm that works with companies like Facebook and Snapchat and Uber and these kinds of companies. I set up their new London division to do games-focused investments and games-focused M&A from China, but also from North America and Europe.
Hi, I'm Shelley from IPC Ventures. I'm the managing partner there. So we are a mobile-first focused fund investing in mobile technologies and startup, but we do have a specialization in the mobile gaming space.
Switch mics.
And we've been quite active in the gaming space for the past few years. We have a pretty strong team understanding the mobile free-to-play world, and so we're pretty bullish about this space, actually. Thanks.
Excellent. All right, so we'll dive right into some of the key questions. So in terms of interest from China around M&A investment, I think, again, we'll frame everything around like mobile gaming companies. What in each of your opinions is kind of the key driver of interest around these sort of M&A opportunities? Thinking around financially motivated, talent, market entry, genre expertise. So we'll start with Amy here, and just what's your sort of, if you were to pick like one key driver, each of you, like what would it be?
Josh, I think all of the things you said above could work for any publisher or company coming out of China trying to do a global thing. I think if you want to say one thing, then it's got to be the synergy between the two companies when it's for an acquisition. So obviously financial motivation is a big part of the thesis that's been coming out of China in the last few years, but the market regulations are changing. The Chinese government is tightening the rules around that. So you're going to be seeing less of mining companies going west trying to acquire game companies, but rather you have more focused strategics who has value to offer either way. So I think finding the right synergy is the biggest motivation.
So I think you see so many deals coming from China. because there are multiple factors that line it up to make it very, very attractive, right? So of course, specific to gaming, there's a strategic component where in many ways, China and many Asian territories, the gaming market is far more competitive than in Western markets. If you look at the top grossing charts, there's a lot more movement. If you look at the number of titles released, the size of those teams there, it's a lot more competitive than, I'd say, most Western markets. And so there's certainly the strategic component. I think another big one that Amy touched upon was certainly the financial element, right? So among Western public markets, private markets, VCs, certainly the interest in investing in content has gone down a little bit because there is less explosive growth and it is a red ocean, as many folks say. But investor sentiment in China, both public and private, is more positive at this point. And so if you look at some of the publicly listed companies in China, they have PE multiples of 30, 40, 50, sometimes even higher, right? Whereas if you look in the West, if you're between 5 and 10, you're in a pretty happy place. And especially if you look at some of the transactions that have happened in the West, those deals are sold at 5 to 10 PEs. So for many Chinese companies, they have an opportunity to essentially arbitrage the profits that are coming from their acquisitions, where let's say if they're able to buy at a 10 to 20 times multiple and they're able to fold those financials into their parent company, they automatically see a significant increase in their market cap, right? So of course, that's just one component of it. Many companies aren't going to do a deal just because of the financials, but when you add on the strategic element, when you add on the competitive element in China, it just makes these deals very, very attractive. And so you see for the last 6 years, more and more deals coming out of China, not just in terms of mobile gaming, but real estate. I think last year was the first year where M&A deals coming out of China was more than $100 billion, right? And you see that you're going to see this trend keep going up.
I think, Jim, I would agree so much with what you just said. So much of the financial motivations from the Chinese companies, we've seen companies like Our Palm sitting on cash, companies like Kunlun, Chinese publishers sitting on cash. Kunlun, about a year and a half ago, bought the gay dating site Grindr. I mean, they've also, and it's just sitting on cash looking to buy assets. But another interesting thing I'm finding that I would offer as in addition to all the financial motivations, which are strong, would be certainly in my meetings with Tencent and my meetings with, again, people like at Our Palm and others and Kunlun and others, they seem to also understand the connection between how we're using our mobile devices more generally. So for instance, Tencent buying banking assets, setting up their own bank to connect to WeChat, or companies, again, like Tencent, again, buying assets from the BMW sort of car, with the electronic car, iCar drive teams. So there's a connection between understanding that we're playing mobile games, we're using our mobiles quite extensively, and looking to have more content, more assets, more connections, more social features around those assets.
I guess most of the points are covered, but I would just say, sort of summarize it, is really underlying drivers would be the talents and the financial, but I guess the most important part is the speed. They basically diversification, like how do you actually get access to content in a much faster pace than you could actually build in organically in-house. And also I think, the type of talents that, in Asia would not be able to create the type of content that are created over here in the West. So it's really that diversification that big companies want to get into and expand their market and footprint much faster space.
Excellent. So I think the next question is understanding some of the sort of characteristics of Western, mobile game studios and what those are that are interesting to potential M&A and investment partners. So we've obviously talked about the creative element. I mean, in terms of revenue and profitability, like in each of your perspectives, like how important are those factors? Are they essential, or is it if the team is talented enough that there would be opportunities for some type of strategic partnership? So in terms of is there a certain revenue scale and profitability that is necessary in each of your opinions for those companies to be interesting for Chinese sort of partners? Shelley, you want to start?
I guess from Asian sort of culture, I think for them to really see through the the potential talents really based on fact, based on numbers. So most of the studios that got acquired or got investment, most of the time have some track record that they can really prove it. So you don't see really like the first time independent studios or entrepreneurs get a huge amount of funding or a quick transaction from the buyers in the East. From the East. So I think it's really a lot more sort of like mid-stage to growth stage companies, not that early stage. That's my thought.
Yeah, I would only offer, I would agree with that. I mean, I think Shelley's right on with that. It seems many of the investments that we've seen over the past have been companies that are slightly beyond the growth stage, if you like, getting into revenues, partly from what Jim was saying about being able to arbitrage the revenues where the companies can fold them into their own PE ratios. I mean, that said, there have been a few very sort of early stage investments that have happened over the last year, but they tend to be more syndicate style rather than straight in.
Yeah, so I think in order for these deals to happen, you need to have the buyers having their needs met by the companies that are relevant, right? So if, based on what we talked about before, what's driving these deals is they want to expand their footprint, they want to find strategic partners, they want to look for revenue and profitability. That essentially means that the targets that they're looking at are ones that meet all of these criteria, right? Of course, some might stress some more than others. So, if there's a large publisher, maybe they're looking for content in the West. If it's a cross-sector acquisition where they don't have a strength in gaming, maybe they're looking more for the financials. So it will differ by who the buyer is. I think one element that does come into play, though, is so China has the CSRC, which is similar to the US SEC, which for larger deals, they will need to approve these deals. And so from the China buyer's perspective, they have a pipeline of deals that they're sending through for approvals. It's not like they can work on 10 deals at any given time. And so if they need to prioritize their deals, of course, they're going to try to prioritize ones that meet all of their criteria, right? Ones that have strategic value, it's a strong team, it's profitable relative to the other deals that maybe only hit 2 out of 3 of those marks.
Okay. Just to finish up, I think the financials. I mean, remember this is cross-border deal, so financials is one very tangible way to evaluate a studio when you're doing acquisitions. So that's always going to be taken into consideration, especially when you don't have that kind of history of relationship together. So the financial numbers will be very critical to a buyer when they assess a deal. I also want to add that there are only a few handful of companies in China that are of such scale that they can do large multi-billion-dollar acquisitions. So if you're a mid-sized company or a smaller scale, just try to do this. It's a matchmaking system. So you just find the right person, the right scale for your company.
That leads perfectly into my next question. So for studios interested in exploring these opportunities, what's like the number one tip you would give them for engaging potential partners? I don't know, Amy, how do you find these opportunities if you're interested? Is it more passive, like they find you, or being proactive?
I think these days at most of the large game shows, you see a lot of Chinese representatives from game companies. It's a good way to tap into the network that way. Use a financial advisor if you feel somebody who's got a track record in the industry, knows a lot of the people in Asia well, and kind of can advise you on who to talk to, what's the strategic angle. Always to have that angle match when you talk to these potential buyers.
Yeah, I think definitely more and more so at these shows, you'll see representatives or folks coming from Chinese companies because they're aggressively out there looking for partners, right? Not just to invest in, but for acquisition. I think where it gets interesting and a little self-serving here from a financial advisor's perspective, but I think what value working with a financial advisor who's familiar with the China market is they'll be able to bring the Tencents, the NetEases, the companies that everyone in the West generally knows of coming from China. But in addition to that, there are companies in China where they've established a very dominant position over there with some of their games, or folks who are aggressively looking to expand into the game space, but they just don't have either the manpower or the network to send folks over. Right? So those are the folks where working with someone who's familiar with the market, they'll be able to get you in front of those companies in order to have that conversation.
I wouldn't add it. I think that's good for that person. Do you want to add on that?
Just have a couple of thoughts there. I think depending which stage you're in, if you're early stage, maybe best to sort of find an individual who has the network, relevant network in China or in the industry. And then when you are sort of in the mid stage and late stage, then really tap into people that you know, and so you want to have warm intro rather than. I think it's more effective. I mean, obviously, game shows and other events would be also very good exposure. But if you could get the referral and warm intro, is the best way to sort of speed up the process and get a more strong recommendation.
So how are folks seeing these transactions structured in terms of like the timeline? Like, is it all cash, like immediately? Sort of like, what's the payment structure? Is there like syndicate deals with like multiple companies? Sometimes you see. Just curious, like what folks can expect. I think thinking like maybe the mid-size kind of transactions based on the audience here. What should people kind of be expecting from these Chinese partners?
Yeah, that's a good one. Certainly, the mid-sized deals that I've seen, the ones that I've worked on, tend to be very similar. At least the sort of the number of them in the last year or so, they have tended to be, because the companies from China or Southeast Asia, generally from say Korea or other areas where there are active investors, they'll be far away physically from either Europe or North America. So they'll be trusting the management team in an arm's length off sort of way to get on with the business and run the business and to back those people whom they've made their investment in, who they've made the acquisition of. So there tends to be a decent amount of cash up front, but certainly less than half. So something like 30% or so cash up front based on the value of the company on the day. And then either an earnout or a share put structure or shares in the larger Chinese company or an offshore company as incentive to go forward, often on higher multiples. So, for instance, a number of deals I've worked on, there have been on day one, the multiples would be something like 5, 6, 7, 8 times, if you like, or of a particular value or a number chosen. But then on the back end, it could be something like 10, 11, 12 times in the future to give the incentive. So it's this idea, which makes perfect sense. If you're looking for content, if they are looking rather for content, and they're backing a management team, and they're going to have an arm's length standoff sort of position for it to let the guys get on with it, then they're going to want to give them the incentive financially also to make something great. So a bit of cash up front to kind of do the deal, but then a lot of incentive on the back end. That's what I've seen.
Yeah, it's definitely the case. The general structure, I think that the range of what's upfront, that's part of the element that can be negotiated, right? So whether it's 30, 40, you can go up to 60, 70% upfront, right? But as Brian mentioned, unlike some, let's say, Western deals where either they're buying the asset, they're buying the user base, they're buying the technology, for these companies, they are buying the footprint, they're buying the talent, they're buying the cash flows and revenues looking forward. And so they realize that they're not going to be the experts in the space, right? So they will structure the deals in a way where the management is heavily incentivized to stick around and be very hands-off in terms of how much they fill around with the business, because they don't. They were interested in the company because they saw it as a golden goose. They don't want to mess with the golden goose.
So what do you guys see as the trend? So obviously there's been a lot of transactions in the last, 12 months, 6 to 12 months. Do we see this increasing in terms of number of transactions from China, decreasing, or kind of staying the same? Just curious to get to everyone's sort of perspective across the group. Amy, do you want to go?
Sure.
What do you think?
I don't want to throw out any names, but I know for a fact that quite a few sizable Chinese game companies are in fact, finishing up their privatization process, relisting back in China. So I think next year is going to be very active. I see definitely a rise in acquisition of mid-sized studios and potentially another big one.
Yeah, it's definitely the case. So if you look at the trend over the last 6 years, if you look at some of the market indicators, you look at the number of deals that have been already done coming out of China for the first half of this year. Certainly there's going to be maybe some fluctuations either depending on how the China stock market does or the guidance from China's CSRC. But if you're overall bullish on how well the Chinese economy is going to do, how competitive the gaming space is going to continue to be, I think it's inevitable that these deals are going to continue. And we're working on 2 very large ones. Yeah, I think it'll keep going up.
I'd offer, kind of in addition to sort of Amy and Jim were saying, a third aspect to it, which is I've seen the beginnings of what I call enabling technologies being acquired by Chinese companies. So if you imagine what many people think of the games industry as being the content, being the games themselves, there's a growing macro trend, certainly in technology acquisitions, where the technology that underlies or supports the games that you're all making is also being acquired. So for instance, if you think of mobile games as a macro trend on top, but you think of virtual reality tech as a thing that may support future games, then that's an enabling trend. There are also things like as cloud communications are growing, actually the data centers or clean technology or the things that support those, or analytics that support business intelligence. Those kinds of companies who are focused on those aspects of enabling the games industry are also becoming targets. And I think I would imagine if games content acquisitions may be the same or perhaps lower, but enabling technologies may continue to grow. Acquisitions of enabling technologies.
I guess just want to add, I think it's very obvious there's a lot of consolidation happening here and in the East. So I think M&A or this type of transaction is a survival game. So if one started doing consolidation or merging, and the other will try to do the same, just to sort of balance the whole market themselves, and then because otherwise they can't compete. So it's kind of that sort of trend. But I don't think. But of course, it really depends on the public market and such. But I'm pretty sure there will be a few more major transactions. So given that said, I don't know if it's relevant to the audience here either. So
I think the next question I had, we've already touched on a few times, but I'm curious to get additional thoughts. The Chinese economy, obviously there's heavy regulatory sort of process around these transactions happening. What's the risk, or what's the potential risk around the economy? How could changes in that impact these opportunities? I mean, do people feel like there is significant potential risk that could impact the ability for these transactions to continue to maintain the sort of cadence or even increase? Any sort of additional thoughts around that? Because I think it's something that's a little bit distant for us here, but very top of mind for this topic. No.
For a thought, it's impossible to see the future, but I reckon here's a thought. So over the last few years, the companies from China, coming out from Korea, coming out from not Japan so much, but a bit of Japan as well, have begun to kind of characterize themselves and see themselves as global players. So as a global player, you would imagine that if domestic rules began to either change or impact the way that you're able to do global deals, that seeing yourself as a global player, you would still try to find a way. So I would imagine that even if domestic regulations in China change, that maybe the cadence, Josh, as you say, could slow down, but I would imagine that the numbers of deals, the appetite for deals would continue because the stage has been set, I believe.
Yeah, so I think there are going to be blips in the market based on decisions that the government makes or things that happen with public markets. So, for example, just a couple of weeks ago, the CSRC provided some guidance that all right, last couple of years there have been chemicals companies or construction companies that had absolutely nothing to do with games buying into these companies, and they're probably going to be a little bit more stringent on those types of approvals. There's also been, as AB mentioned, public U.S. companies that have privatized out of the U.S. stock market to relist in China. And so in order to do so, they essentially have to acquire a company in China, like essentially a shell company. And so what you see is a lot of these shell companies that in China don't have a core business, their valuation goes up because of the anticipation that someone is going to privatize and buy their company or merge into their company so that they can publicly list in China. And so the government regulations, they're toning down some of those things. So you'll see kind of ups and downs, and maybe the types of deals will shift, the structure of the deals will shift. But again, I think the overall trend is going to be going up.
Yeah, my favorite was the chicken farming company that bought a gaming company. So we have like 4 minutes left. Do we have any questions from the audience? No? Surprising. So another very topical question. So we have like the Supercell Tencent transaction. Love to hear folks' thoughts. Like, what was the key driver for that deal? Obviously, it's very large scale in terms of consolidation across the global like mobile space. What do you think was like the key driver for Tencent and executing that transaction?
I see it as a very, very strong signal of Tencent going global in the mobile. A lot of their titles have done well in China. Large DAUs, very low ARPU. Those games are very kind of casual to mid-core, very well positioned to the global audience. I think Supercell, in addition to the revenue and the profits that they generate, they are a massively efficient UA machine in the West. So I think through the acquisition, Tencent can leverage that to help them broaden their audience.
As much as that deal does support this overall trend, there are certain elements of that deal that were very, very unique, right? Tencent is arguably the world's largest. Actually, it is the world's largest gaming company. They've been very aggressive with investments and acquisitions even before all of these recent China investments and M&A happened. You look at Supercell, really. They are the #1 mobile gaming company at this point. They've got multiple successful hits. It's not like there's that many of those deals to go along. And then you look at SoftBank, who sold their shares. They just happen to be in a situation where they're reevaluating their internal investment strategy. And so it just so happened that they were looking and considering to divest out of Supercell. All these things came together at this time and made for a huge deal.
I would add to that as well. I'd say that it is a perfect storm of a number of elements that came together, and you could put two more on, in addition to what Amy and Jim have said. You could say that Tencent also likes to see itself as the global #1, and it is the biggest deal. So there's a bit of kind of swagger to it as well, thinking to do such a big deal, which I think is exciting. And then equally, sometimes deals are done defensively. It may be that there would be great interest for those shares, and it's better to be the person. Tencent perhaps may think that it's better to be the person to take that deal rather than to be the one who's watching on the side.
Yeah, I think it's definitely a good synergetic transaction between the two companies, and plus also I think this could be one of the more successful merger in the industry, because given that like Tencent has done it before with Riot Games, it's really successful. Like how Tencent left the company sort of independent and then continues to grow. So I think it's good for Supercell that they can continue to grow even faster and better, and especially tapping into the Chinese market. They've been working with a number of different publishers in China already. So I think Tencent would be definitely a good partner for them to grow. So it's pretty bi-directional transaction there.
Awesome. Any questions? No? All right, cool. Oh, wait. So hands-off strategy, is that a trend or unique?
I don't think that's a trend in terms of the approach in post-PMI, the post-merger integration. It's really based on the DNA of the acquiring company. So some are more hands-on, and some are more hands-off. So it's really a case-by-case basis. I don't think you can educate, a big, corporate to sort of follow the trend if they have been really not very well educated to do PMI. And I don't want to name it, but I can give some example offline if you want. But I think it's not really something you can sort of find a trend per se and follow the path.
I think what else makes this deal very unique is that even before the Tencent deal, the way that Supercell had structured their deal with SoftBank was such that even though SoftBank was the majority shareholder, the Supercell founders still had the majority control within the company, meaning they could make the call if a successive deal happened. They were deciding which games to build. Even that one wasn't a traditional investment deal, right? So even though in general, as we mentioned, China acquirers, our investors are going to be relatively hands-off, this was much, much more hands-off than I think even those deals are going to be. And it's because of the leverage that Supercell had. And I don't know how many other companies are going to have that type of leverage in negotiating these deals.
Awesome.
So the bargaining power that you can have.
Awesome. Well, thank you guys very much. If people have other questions, obviously come chase them down if you want them to help sell your company as well. Thank you very much.